Alrighty, I'm recording. All right, with all that said, so two ways to find, I'm just recapping it for the video. Two ways to find earnings. One, go onto Google and you can see through social medias or anything like that what companies are having earnings to come up. Another thing you can do is just go to the Market Watch tab, go to calendar, make sure you're on whatever week you need to be on. And then this is everything that has earnings. What I like to do is I like to organize this by verified. That way I know if it is or is not coming after hours or before hours. I don't like things that are unverified because one, I like clarification on things. And two, if something's not verified and it's already the week of earnings, it's probably a sketchy company to begin with, and it's not going to have the kind of volatility crush that we're wanting. So with that being said, I want things that are well known, earnings coming up, and it's going to have some hardcore crush behind it, like Netflix. Everybody and their cousin knows Netflix, probably because the cousin stole the Netflix password. But what I do is I write down the companies that I like. Yeah, typically 3, 5, 10 companies, something of that nature, depending on how far out I want to be spread. I write it down here in the scratch pad. And then once that day comes up, I go through and then at each name, I put what strikes I'm looking at and about what I'm looking to get paid for each iron condor I'm putting in. Now, this is a, Earnings Whispers on the Twitter. They have that up all the time. They have their little graphic. You can see right through here, a lot of different names up. Procter & Gamble, Team. Friday is actually kind of light with AXP coming up. A lot of credit cards, Capital One, American Express, all of those coming up this week. Capital One is tonight. That's ticker COF. So let me go ahead and explain what I'm looking for on these. Let's just go ahead and do COF since it's the first one on here. So COF, Capital One Financial. I like them. They're cool. I got a couple other cards, is what it is. Are they the best out there? Are they the worst? No. I know way, way, way worse. But I like them. So the thing to keep in mind is that this is the one point in time when trading that the ATR doesn't mean jack. The ATR means absolutely nothing at earnings time. And the reason for that is that there is an excessive amount of hype and volatility expected for this specific day. After that, after the earnings time in there, then ATR comes back into an effect. But right now, doesn't mean anything. So right now, 52-week daily average move is $1.45. But what is the big money expecting? The major markets, all of that. A $4 move. They're expecting basically a $4 move. What I like to see is that last hour of the day, I want to see about what price is at. So if we're at the 103 area, I just grab my handy dandy calculator and I go, okay, 103 plus $4 gives me $1.07. So this is the maximum I'm expecting, or what the market's expecting. If we were to gap for earnings, this is the maximum move they're expecting. We can see here, I actually have a 109, a 110 right through here, and those are really, really, really cheap now. So I'll go in some more. I'll come in some more and adjust those. That's why I put that little thing at the top. All of this is subject to change based on intraday action. Things that happen during the day can ultimately change that. So these calculations were made at 10:30. We still have another 5 hours of market conditions. We could go to war. We could be bombed. We could the grid could go down. Financial networks get racked really hard. And then we decide to swap from oil. There are so many things out there that could affect this. So you do your initial to get okay, I'm looking at about this strike. And then at the end of the day, about 3 o'clock, you come in and you go, okay, my final decision is XYZ. You want to go for whatever price is. You want to go to the extreme. That's the one you sell. The one you buy for protection is one strike just outside of that. Now for the put side of things, same thing. 103 minus $4 gives us 99 bucks. Now this one does have a half contract at 99.50. That is entirely up to you. Well, all of it's entirely up to you, whether or not that is that extra 50 cent worth the premium. Sometimes that extra 50 cent of risk only gets you like 2 cents worth of premium, and it's just not worth it in my book. I'd rather be a little bit further out and be on the outer extremes and stay safe. You can see here on the Netflix one, I've got a safe and a risky. Netflix, everyone's going to be watching this after the bell. So this one's going to go crazy. This one's going to go stupid during the bell. But we're going to capitalize on that. So it's something to keep in mind. With these new numbers that we see now with a $4 move, we would adjust this strike. So let's see, current price is 102.70. So 103 plus 4 was 107. So now I can go over here and say, oh, I want to sell the 107 and buy the 109 right through here. And then same thing in reverse. So I want to, let's see, $4 down would be the 99. So I want to sell the 99 and buy the 98. And I want to get at least 28 cents or better for this move. So I go right click, sell, Iron Condor, 107. Why did I put 109 there? My apologies. 108. And then I want to sell a 99. I got 99 options, and this is just one. So, and 98.50 for protection. So I'm getting 23 cents as of right now on this. So again, we still have another 4 hours of this going on. So this may change. You know, I may go in a little bit. I may go out a little bit. You know, sometimes you got to pull a do-si-do on this and just figure out what's going to work. You need to make sure that the credit you're receiving is warranting their risk. So the further you go in, yeah, you're going to get paid more, but you have a higher probability of this option opening tomorrow in your excessive risk area. So you would be down that money. And if you're not able to manage the position quickly, then you could find yourself possibly in a margin call, possibly just out a bunch of money. So that's something you got to keep in mind. Now, something that would make this a little bit safer of an idea is go back and look. What does it typically do at earnings, especially on good earnings? Does it have an average of gapping up more so beyond its expected move or below? You know, does it stay within that expected move? If it tends to stay within its expected move, then okay, you could be a little bit tighter. But if it tends to go a little bit beyond what people expected, then put your strikes a little bit more, or do not lean as heavy on a specific bias. And the thing about Iron Condors is, even if you do have a bias, they allow you to have protection on that bias. So, you know, it's a really safe way of doing things. And they are not, let me rephrase it, the way that I trade them, they are not meant to be held until expiration. All we are capitalizing on is the inflation of price due to the earnings event. Tomorrow, once earnings come out, that inflation is gone. So we are capitalizing, taking that difference of this was inflation, now it was deflated, we keep the difference. That's all it is. Yeah, cool. Just reading what Angel had there. So earnings whisper, IBM. Yeah, I like IBM as well. So IBM, 144, 145. So we'll bring that one up as well. So IBM. And then this is just what I do. I go through, I look, I see what's our high probability move. I see we have a squeeze on the daily here. I see on the hour, we've got a squeeze. So bada boom, bada bang, earnings coming up. I see our next resistance is 143.92. Might as well call it 144. Current price of 138. So if we got a resistance of 144 and our current price is 138, well, I'll be darned. Look at that. A $6 move's expected. That $6 move puts us right here at that resistance area. So it would be a safe bet to suspect that 144 would be our highest probability for this thing to stop, unless there was a really good reason for it to continue higher. IBM affected by a lot of things, affected by trade news, affected by consumer, affected by enterprise sections. So something to keep in mind. If we've got less jobs and the market is contracting in things and the economy is contracting, then yeah, IBM struggles. Why? Not a lot of startups. You know, a lot of startups, enterprise setups, they rely on IBM for a lot of different things. So unless it's graphics design, then everyone just kind of apples. So But with that being said, we can see here 144, 145 is still a solid metric. So I come over here, sell Iron Condor, 144, 145, awesome, 132 and 131. Yep, so 132. Oh, I heard a 132. Oh, speaking of, we got a special thing coming up. Trying to get it. So 35 or better. Check it out. 32 to 39. You know, I could go ahead and get into this trade, but there is a possibility of me gaining more funds towards the end of the day with that higher rush up. So that's what I like to see. Now, this could get more. Like I said, I want 35 cents or better. So if I come on here and the natural sitting at like 42, 45, I'm going to boom right into that natural right there. And I want to claim that trade. Fun thing to do is to see where the maximum side of this is going, is just swap it and see what a debit would be. So a debit mid is sitting at 40 with a high of 46. So, and we're same here, 40 with a low of 34. So we got about an 8-cent spread all the way through on that. We got about an 8-cent spread on these. So you're going to be in the hole when you first start. You're going to be in the hole by about 4 or 5 cents, give or take, which depending on how many contracts you put in could mean something. Me, I'm looking to probably run 3 or 5 lots on this, something like that, 3 or 5 lots. I'm going to see how things go. I'm going to go a bit heavy on Netflix, but I have experience trading that. If you're a new trader just getting into this, do not go heavy on Netflix. Do not buy naked options on Netflix. That's a very bad idea. This specific setup is taking advantage of individuals that YOLO and or just new individuals that go, oh my God, earnings is coming up. Let me buy a naked option that's inflated going into earnings. No, it's like a car. When you buy it and you drive it off the lot, it loses a bunch of its value. Exact same thing. So, alrighty, peeps. Before I cut this off here, like I said, it was only going to be about 15, 20 minutes on this. Are there any questions on Iron Condors, on earnings Iron Condors that I'm looking at, and specifically any of this? The Netflix, let me go over that one real quick. So Netflix, you see I've labeled here the safe and the risky. No, that is not the soap opera that follows Days of Our Lives, but it probably could be. Okay, so 362. They're really the safe and the risky. These are the trades of our lives. Oh, okay. The sad part is there will be some people that never get that joke, and it saddens me severely. 307. So again, our expected move, $26, almost $26.50. 307.50, and then debit of $22, and 305. So when you run the math on things, that $26 right in there. So 338 minus 26 gives us actually 312 as a safe zone. So 312 would be the safe zone. You could actually run the risky on this one with the 310 and still be in it, but the 307.50 is going to give you a bit more protection. So again, that is entirely up to the individual of how risky do they want to be. This is paying me $96 right now per condor that I put on. So if you put 5 of these on, you have a maximum of somewhere around $450 profit. Realistically, you're going to get somewhere around 50 to 60% of that at most. So $200 profit, give or take, once the deflation comes into an effect. This is something I would wait till the very, very end. What is the max loss? Let's go ahead and look. Max loss on this one, 153. So for every $97, you're risking 153. So to make, I mean, you can scale that up by 5. So 153 times 5, we get 765. So there you go. You're gonna look to make $500, but you're gonna risk 65 bucks, give or take. Now, if you manage that correctly, you'll not lose anywhere near that max loss, because we've talked about before on how you can work the position to, because you're buying one already, outside here as insurance. Let's say you lose this entire call side of things, sell that call out for the best price you can get right there at the bell. Or, I mean, you'd buy it back. You'd buy this call back at the best price you possibly can, and then let this baby ride up to recoup some of that loss. Can you recoup the whole loss? Yes, but it is very, very, very rare. Rarer than hen's teeth. Now, I'll put it, I'm trying to think, it's rarer than a good steak. So what you can typically expect is about 30 to 40% you can gain back of your loss, but this side will still be a loss. So as long as this side capitalizes over that, you'll still make a profit. Nowhere near what you would have got had things stayed within the range, but still a profit. Typically somewhere like 10 to 15%, give or take. So, and that's different for every individual because the fills will be different, the management will be different. And again, you do not want Netflix to be your first Iron Condor earnings trade. Do it on something like Capital One, IBM, United Airlines, something of that nature, because we're not holding this to expiration. We put it on today, we take it off tomorrow. We're capitalizing on that deflation. Why are we moving it so quickly? So we can move those funds into Wednesday. Yes, I know I didn't fully put out Wednesday. I was feeling lazy when I was typing that. Here we have Johnson & Johnson, AAL, DAF, Johnson & Johnson, Texas Instruments. Penny stock FCEL is also tomorrow. I don't necessarily recommend running these on penny stocks if you have no experience. So FCEL. So FCEL, you can see very light. There's not a lot of love coming through here. Yeah, we got some right here at the 3 and the 4, but not something I would call the best thing to trade. I'll put it that way. So this is something that you have to have a little bit more experience in reading biased, in seeing general things, and even diving into the SEC documents to get a little bit of an extra edge on this. Otherwise, if you have not done all of that legwork, you are just gambling with it. So we'll put that out there. On IRBT, why does that sound familiar? Ah, that's why. Darn you, Will Smith. Darn you. For those that don't know, Will Smith was the actor for iRobot. It has earnings Feb 5th. Oh, 2 days before my birthday. Fun. What's the expected move? $9. I mean, this is still way too far out. To do what I do, this is still way too far out. Let's say realistically, by the time it gets there, it's around the 58 region. 50. Let's give it the benefit of that. Let's say it's at 60. So $10 would put it here or here. I mean, that's a pretty safe margin to work with, but you can see on past earnings, what has it done? 3 out of 4 earnings died. And then the one earnings it did good, it gapped 895 up to 103, so $4. And then when it died, it 129 down to 100, so a $30 move. An average here of 92 down to 70, so another 20 some odd dollar move. So when this thing dies, it dies. It gets really dramatic with things. I mean, this thing gets to be a 16th century play, kind of dramatic. So I'd be very careful. I would watch for initially what's happening, but I personally would not put anything on now. If I did put something on now, it would be to take it off that Monday before and then put something on the day before. So I wouldn't touch it. I mean, You know, that's the thing. The way things are looking, no. Why pay for something that 3 out of 4 times messes up? So, I mean, could it go? Yeah, absolutely. But the one time that it actually did gap up bullish, it gapped up a quarter of what it fell typically. If we bring it onto an even wider time frame, we can see same song and dance. Its gaps up are nowhere near as great as its gaps down. So it had one that was good out of 4 years worth of data. It had 1, 2 that were good. The rest, meh, unless it went down. If it went down, oh man, it was gorgeous. But other than that, no, I see no good logical reason to put it on, especially if it's being pumped. Especially if it's being pumped through there, no. Like if it's the Starlight on MSNB whatever, then no, not what not by the hair on my chinny chin chin. So, alrighty, peeps. This has been Creedmoor with the Bullish Bears. Typically a little bit more nonchalant than usual, but that's what I'm looking at for earnings. I'll let you guys know what the final numbers are. I'm going to be looking to put those on around 3:30 or so, probably after I have a nice lunch. And yeah, I'll let you guys know. Let you guys know how they work out. I think what's tomorrow? Wednesday. Who's streaming tomorrow? I think it's Sig. Yeah, Sig and me tomorrow. So tomorrow afternoon when I stream, then I will go over how the positions worked out. And then we'll also look to put positions on since I'll be streaming at that point in time. But today, look around 3:15, 3:30. I'll let you guys know what I personally get in at. But do know that that's going to be delayed information, probably by like 5 or 10 minutes. So don't try and follow me in at those numbers because they'll be delayed. So you'll probably not get filled at that region. You may get filled more, you may get filled less, and it may not work out for your stuff. So those are what I'm looking at. That's how I find the information I'm looking for. And now it's your responsibility to utilizing the same metrics. See, is this worth trading for me or is it not? So, alrighty, peeps. This has been Creed with the Bullish Bears. I'll see you guys later on. And as always, remember, your trades are in the history. I'll see you around.